Homeowners insurance. Our homes are subject to many risks, and although disasters are rare, they could devastate your entire financial future if you are not safeguarded against them. Each homeowner's insurance policy is different, and it is up to you to choose the one that suits your needs the best.
Homeowners insurance policies can cover the following: fires, explosions, storms, floods, lightning, burglary and theft, alternative accommodation, loss of water, damage to electric devices after a power surge, the cost of tracing a leak as well as necessary repairs, fire brigade charges, property transfer, professional fees and demolition costs.
Reducing risk. The easiest way to reduce the monthly payment is to live in a less expensive house. Unfortunately, there's a direct link between the replacement value of the property and your premium payable. The regional area and location of the property impacts the premium, and it is therefore better to live in a safe area. The type of building you own, glass and steel structure, an old stone house or a thatched roof, have different inherent weaknesses. All have an impact on the premium. Therefore, choose wisely.
The state of the building, especially the roof, your credit rating. Make sure that your home is well maintained in a secure, reasonable area away from riverbanks that could flood or any other potential hazards, and has a solid structure. Car insurance. Your car is an indispensable part of your life, and for many of us, we need it to earn our living. Make sure you are sufficiently protected against damage, loss, third-party claims, and other risks with the right car insurance. This cover can apply to any car, light delivery vehicle, motorcycle, trailer, or caravan. Cover options include comprehensive. This is intended to protect you against the most likely ways in which a vehicle can be lost or damaged, whether parked or moving, and also against the claims of third parties for loss of or damage to their vehicles, or as a result of personal injury or death not covered by the Road Accident Fund, or loss or damage to other people's property as a result of a motor vehicle accident. It also includes roadside assistance, medical assistance, towing and storage, depending on the type of comprehensive cover that you choose. There are many add-ons which obviously cost more than the basic policy, so go through the list carefully and make sure you select what you would like to include. Limited. Fire, theft and hijacking. Accidental loss of or damage to your vehicle, only if the loss or damage is caused by fire, lightning, an explosion, theft or hijacking, attempted theft or hijacking, and amounts for which you are legally liable to a third party if the liability relates to the vehicle.
Third party only. This is the cheapest of the three, but only provides cover for damage you may cause to other vehicles and the accidental death or injury of a third party caused by you in an accident. This does not cover you against the loss of or damage to your own car.
As with all insurance, your circumstances will determine the cost. Compare several rate quotes and the coverage provided, and check periodically to see if you qualify for a lower rate based on your age, driving record, or the area where you live.
Reducing the risk. The easiest way to reduce the monthly payment is to buy a less expensive car. Unfortunately, there is a direct link between the value of your car and your premium payable. The age of the driver also impacts the premium. Where the car is parked at night either increase or decreases the premium.
Negotiate the excess amount that you have to pay on every claim. A higher excess will reduce the monthly premium, but do make sure that you have that excess available. Previous claims for accidents count against you, so make sure you drive carefully. The distance you drive every month can be a factor. Some insurance providers even offer a special rate for low mileage drivers.
Using your car for business purposes costs more. Some residential areas are seen as high risk, so do try to live somewhere safe. Women get better rates because they have been statistically proven to drive more safely than men. Some companies give better rates if you have taken an advanced driving course. Most companies offer rebate if you have a tracking system in your car. These savings can help the tracking system pay for itself over time.
Medical cover. Health insurance versus medical aid. Health insurance and medical aid are two different products. Both products offer healthcare cover, but are guided by different sets of regulations. A health insurance product pays you a set amount for each day spent in hospital, regardless of the type of treatment that's required. Medical aid product typically provides in-hospital cover and pays for treatment according to the cost of the condition and mostly pays the supplier directly.
Health insurance is usually a cheaper option and can either be used as an alternative to medical aid or as an added benefit to your medical aid product, depending on your level of affordability. Medical aid ensures you are covered if you need to be hospitalized, have a chronic condition under prescribed minimum benefits, or need day-to-day benefits. Health insurance ensures you receive a payout if you are hospitalized and cannot work or earn a living.
What are the key features of health insurance? Health insurance will reimburse the member for some of the costs associated with an illness, medical condition, or a major medical event like a heart attack. The member is either paid an amount per day or a lump sum depending on their type of benefits and health insurance cover. Health insurance is governed by the Financial Services Board. More affordable than medical aid, but offers less in-hospital cover. Payments are made directly to the health insurance plan member, who must then settle with their respective healthcare providers.
Medical cover is only provided for certain types of illnesses, injuries, and procedures, as cover or benefits depend on the member's health insurance plan. Benefits have their own individual waiting periods, can include additional benefits like accident and emergency cover, maternity lump sum benefits, and death or funeral cover.
What are the key features of medical aid? Governed by the Council of Medical Schemes and the South African Medical Schemes Act, medical cover is based on the medical scheme tariff. Payments are usually made directly to the healthcare service provider. There are fixed monthly fees. There is a standardized prescribed minimum benefit list. Does not include additional benefits. There is a waiting period for the overall medical aid cover. If there is a shortfall, the member will be required to cover the price out of pocket or through additional medical cover like gap cover.
What is the cost? Medical aids will charge their members the same premium for the same plan, while health insurance premiums will differ according to the benefits a member has selected and the risk profile of the member.
How to decide which type of medical cover is right for you? Health insurance is suitable for those people or families who have financial constraints and who aren't able to afford private healthcare otherwise. However, if you or a member of your family have a serious healthcare condition or a chronic condition, or if you know that you are likely to require hospitalization in the near future, then a comprehensive medical aid plan may be more suitable for you. Health insurance is definitely more affordable than medical aid, and it allows for more flexibility than a rigid medical aid plan, but one must be mindful of the fact that there is less in-hospital cover and that it's more suitable for day-to-day benefits.
Reducing the risk. Living a healthy life is an essential part of reducing your medical cover risk. Many shared value programs exist, the biggest being Discovery Vitality, where you participate in a shared value model. You live healthier, the medical aid insurance pool pays out less per year, and you share the value gained by receiving financial benefits. Always important to negotiate with your doctor when it comes to your medical bill. The prices are not cast in stone, and they are almost always open to reduce their costs to suit your medical cover payout or money available. Some medical aid premiums are job-related. When you get a promotion or change careers, shop around again to see if you cannot get your own medical aid to offer better premiums or move to another one that does.
Get the most out of your medical aid by completing their recommended list of activities, such as getting annual flu shots. Sometimes there is a financial benefit through their loyalty program. Plus, you can have a better chance of staying healthy and avoiding further medical expenditure. Join early. When you only join a medical scheme later in life, for most medical aids, this is after the age of 35. You will pay additional late joiner fees and will probably be subjected to a waiting period.
Get expert advice. Medical aid documents are chock full of medical jargon that no layperson could possibly understand. Get a medical aid broker or another expert in the field to explain everything on your contract so that you don't end up overpaying for benefits that you are never going to use. And speaking of fine print, pay attention to what your policy says about specialists. Some policies do not allow you to see a specialist without a referral from a GP. You do not want to visit an expensive specialist only for your medical aid to reject the claim.
Know your own risks. The older you get, the more important it becomes to have an annual checkup with your doctor. Prevention is, after all, better than cure. So if you have underlying conditions such as high blood pressure, it can be treated a lot less expensively than when they actually start to affect your health. When you buy a medicine at the pharmacy, they normally give you an option between the original medicine and a generic version. The generic medicine works just as well as the original and can save you a lot of money.
Life insurance. What is a life insurance policy? Essentially, a life insurance policy is a contract between a life insurer and a policyholder that offers the policyholder peace of mind, knowing their loved ones will be financially secure when they die. It's a means of protecting anyone who is financially dependent on you should you pass away, become disabled, or get a dread disease. Depending on the life insurance policy you take out, you may also get an amount paid out to compensate for the costs of a funeral, which can ease the burden during a difficult time for your family.
How does a life insurance policy work? There are 4 parties involved in a life insurance policy. Number 1, there is the provider, the financial institution providing the insurance, also called the insurer. Number 2, the insured is the person whose life is being insured by the policy.
Number 3, the person or people who receive the payout should the insured pass away are the beneficiaries. With dread disease and capital disability cover, the policyholder is paid out, not the beneficiaries. Number 4, the final party involved is the owner of the policy. This is the person responsible for paying the monthly premiums. Sometimes the insured and the owner are the same person, but not always.
Do I need a life insurance policy? Well, the purpose of life insurance is to cover your loved ones against the risk of financial ruin should you pass away. So if there is anyone in your life who relies on you for financial support, then, well, the answer is yes. Life insurance is recommended. Also, remember that a dependent is not necessarily a child. It could be extended family members, parents, a spouse or ex-spouse, a business, employee, a dependent adult, or even a business partner. Life insurance can also be used to cover debt, like home or car loans. In some cases, you need to have a life insurance policy if you are taking out credit.
What is funeral cover? Funeral cover, or funeral insurance, is a type of insurance that pays out a lump sum when you, the beneficiary, passes away. You can also purchase a family funeral plan, sometimes referred to as extended cover, which pays out a lump sum in the event of the death of your partner, spouse, your child or children, and or any other family member that you have chosen to cover with the policy. The money paid out is intended to help with the cost of the funeral.
Why you should have funeral cover? There are few things in life as tragic and heartbreaking as an unexpected death in the family. This trauma is only compounded if, while trying to come to terms with their loss, the family must deal with the cost of arranging a funeral to honor the memory of their loved one as well. Now, did you know that South Africa has, on average, some of the highest funeral costs in the world? A funeral can be financially ruinous if you aren't expecting it, or if your late loved one hasn't made provision for it.
Depending on your family tradition or custom, the costs could pile up into tens of thousands of rands if you include the undertaker's fee, buying the burial plot, and more. This is a steep cost to bear out of pocket, and if you have funeral cover, these costs are taken care of, and you have one less thing to worry about.
Life insurance is based on an individual's profile and needs, which comes with complex underwriting requirements, making it comparatively more expensive. Funeral cover doesn't have this problem. Thus, funeral cover is cheaper and easier for you to get compared to life insurance. However, most funeral cover policies will have a waiting period for natural deaths of 6 to 12 months. So if you'd like a funeral cover with no waiting period, you need to specify this need.
Reducing the risk. Number 1, the best way to reduce your risk or premium with life insurance is to take it out early in life, when you're still young and healthy. This helps you go through underwriting without any issues, and your premium is priced well as you have less risk.
Number 2, You then have the following mitigating factors later on in life. A. Your age. B. Your health. C. Not smoking. D. Absence of chronic illness. E. Not participating in hazardous activities. F. Your profession. While not all of these factors are in your control, do what you can to eliminate as much risk as possible to keep your premiums to a minimum. Number 3. One way of reducing funeral costs is through careful estate planning to keep all your costs to a minimum. Some people want a lavish send-off in a large ornate coffin, but all of this costs extra, and funerals can be expensive affairs. For example, cremations cost less than burials. So if your religious or personal views allow that, it might be an option. Leave clear funeral instructions in your will to help your next of kin carry out your plans.